Hello traders, good to be back with you. Jeffrey here from Strategic Day Traders with another recording of our week's results. It was a little bit of a short week for me. I've been traveling and so there were no signals on the Sunday evening currency pair moves, and then a couple of the days we had some no entries, so we mitigated any losses, but overall we did well. And before we get started, as always, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. And for those of you that are new, I use a very simple strategy to look for my potential entries and exits. It's based on a movement of the price bar from an outside extreme, either above or below this envelope here that is traced by the red and green lines. That is the Nadaraya Watson envelope. That's a free indicator that you can download. I certainly do get into more information in my private group and the live sessions for training that we do every week. But basically, we're looking for movement from an outside bar off of the edge of a supply or demand zone right up to the opposite side, so long as it is in confluence with the overall bias, overbought, and oversold conditions. Here's another look at price movement. One of the reasons that this strategy works so well for me is that currency pairs, currency futures, oil, and gold all have very regular, repetitive, parabolic movements from one extreme to the other. Here's an example of what these signals look like. So in the evening between 6 and 8 p.m. Eastern, after I have watched the market movement over the last 24 hours, taking into account the relative economic and geopolitical news events, the upcoming news events, as well as the opening currency strengths in the other foreign markets. I'm going to get a bias, either long or short. I look at all 28 pairs, the major pairs and the minor pairs. I don't really look at any of the exotics, and get my best picks for my own trades from those pairs, whether long or short. Choosing an entry point that's typically a pullback. But again, if you're in front of your computer and you're looking at the charts, you can certainly choose to enter at market if there is a strong amount of momentum behind the movement and it is just taking off and it's a continuation trade, and you don't think you're going to get a pullback. Here's another look at what our typical signals, alerts look like. So if I come out with an alert right around 7 to 8 p.m. Eastern time, in this short trade, I was looking for a pullback. We had our entry right over here. We hit our first high probability target, and then we continued off into the New York session and had a nice almost 100 pip trade in this particular one. Now, this past week, we had a little bit of news that we were responding to. It wasn't a particularly big week. We had Canadian interest rate reports, a lot of manufacturing news out of the euro, so we knew to be careful in the overnight period for any of the euro or European currency pairs. We did have some U.S. news Thursday morning, as we typically do. And coming into the end of the week, it was, as I said, a relatively quiet news week. Here is how we did. As I said, we only had 4 days that I was able to do calls on, a couple of no entries, so we mitigated any risk. And overall, we still did great, almost 600 pips overall. So let's go ahead and take a look at a couple of these trades in detail. Hello, traders. So here's the first trade we're going to take a look at. It was on 10/21. We're looking at the USD JPY. And when I posted the signals, as you can see, we were looking for a pullback to 150.459 with a stop loss at 149.711 and a take profit at 159.33. So let's see how it played out. Very quickly, within the first 30 minutes or so, we got our pullback right to 150.598. Okay, at that time, we saw our stochastics pull back, and start to make its turn back up. So it's not quite signaling that it's in the oversold position. However, it really had a big pullback from below. So this is exactly what we're looking for. Even though it hasn't quite crossed the 25 threshold, that's in line with being in the right place. Ideally, it would have been great if it was down here, but this is just fine. Plus, we saw our Williams not hovering deeply into the lower channel, suggesting that it's going to continue down and making a turn back up. So both of these are indications that we got our pullback and we're going to head back up. Now let's take a look at it candle by candle. After the first 30 minutes, we're looking at the chart and we see that we've got our turn back up and then a nice move back up, and we're headed into the right period of time that we're looking for. Now, 159.33 is exactly what we're looking for. And at this point, as we're starting to get into 9:30, 10:30, 11:30 Eastern time, you can just let this run. But in this case, we got our first target right away, right at 150.933. And now the next decision is to decide whether or not, if you're still looking at the chart, you want to move to break even and let this run, or just see how it plays out on its own and set your remaining runner to break even when it crosses the linear regression moving average, or just a flat amount of time. So as this played out, I in fact set it to break even right, I set it to if it broke back through our target. So I took my second runner right at 159.33. But if we would have left it to run and set our target at break even, you see we were never stopped out, and we could have let this run throughout the London session. Here's the London session at 03:30. And in this case, my call of this being a good long to take over the next 6 to 12 or even 24 hours really played out. Once we got into the New York session, look how this took off beautifully. Okay, now I got my two positions out back here, but you easily could have let this run if you set it to break even and just let it play out and gotten several hundred more pips. Okay, so that's the USD JPY on 10/21. Okay, traders, now here's another one. Let's look at the pound dollar from 10/24. And as you can see, when I published the alert and the trade idea right around, looks like 7 p.m.-ish on 10/24, we were looking for long bias, a pullback right to 29579. We've got our stop down here below what looks like a reasonable area of support. And then our first target right up here close to the opposite end of the envelope at 29839. So let's see how this played out. We are already overbought, and hopefully we're going to get our turn down and move in. And in this case, we'll watch it for a couple, 4 or 5 candles. That's what I typically do. I look at the charts for the next hour or two, and sometimes I will adjust my entries. But in this case, hold on, let's switch over. In this case, the first candle started to close down, and we look like we're heading right to our entry, but didn't quite do it. We had a little zone there that pulled in. And then finally, once we pass midnight, we start to see a little movement. However, now I'm away from my computer. We did not hit our entry. So we let this play out. And then finally, right about 3:30 a.m. when London opens, sure enough, we got our entry, and we're looking for our first target right up here close to the opposite edge of the envelope. We made our move down on our stochastics. We made our move down on our Williams, and we're heading up. Now we're looking to hover in this upper area for a while. And then as we start to move in, we almost hit our target, and then finally got our target close to 6:30 in the morning, right at our first high probability. And then at this point, I'm back in front of the computer, and I see this supply zone right over here. So rather than wait for a pullback, and excuse me, a runner to cross the linear regression moving average down here. If we hit this area right up here, I'm going to take that runner's second profit. Sure enough, that's exactly what we did for a nice profit right on this trade. So there we have a couple of nice trades that we took this week as an example of following the trade idea post that I put on my private Telegram channel. Now here's what we're looking at going into this week. On Tuesday in the morning, we've got some US data, consumer confidence is coming out, as well as job openings. And keep in mind, before the presidential election, with all of the extra focus on interest rates, core inflation, the labor market has been ultra important. So we might see some movement in the US dollar as a result of this. Later on in the day, in the evening, 8:30 p.m. Eastern Time, Australian news. So any of the Australian pairs are going to be affected by that CPI report. Then later in the week on Wednesday, Bank of Japan is going to come out with some interest rate news. We'll investigate that a little bit further. The Japanese interest rate reductions have been a big focus of attention over the last few months, so this will no doubt be the same. And then we've got some PCE results, U.S. inflation and consumer information coming out on Thursday morning, as well as some unemployment claims. Not until after the election will we have the big complete October claims. So they'll get away without that more important labor report, but this will still be impactful. And then later on, to wrap the week up, we have some preliminary unemployment rates for the weeklies as well. So that is a wrap on the news coming up this week. Sorry about that. And going forward, by all means, anyone who is interested in finding out more information, please go ahead and check out the website at strategicdaytraders.com. You feel free to email me. If you want to copy and paste the free Telegram channel, you've got the invite right over there. Or again, you're welcome to email me and I'll shoot you the invite where we'll post some sample signals that we took throughout the week. And if you have any questions, happy to be here for you. And that'll do it for this week's review. Great being with you again. Have a good trading week, and we will see you in the next.